Welcome back to the Sunday Business Page.
For those who have investments in the housing industry and for the average person whose investments in general, the housing crisis is becoming a bigger and bigger challenge. PJ DiNuzzo is president, founder, and chief investment officer at DiNuzzo Financial Advisors in Beaver, Pennsylvania. He's with us this morning on the Sunday Business Page to talk about the short-term and long-term impact of all of this on investors and the stock market. PJ, welcome back.
Good morning, John.
You know,
thanks.
Most of us have something in the stock market, and we're not happy at the moment. In fact, we're very, very unhappy at the way the market's been going. Does this bill signed by President Bush this past week do anything to help us and the market?
Yeah, this is going to help out, John. We're starting to dig our way back out. It's really, your two guests on are very prescient choices this week. It's really been the housing market and the subprime financial crisis challenges we've been going through. So it is going to help a lot. We need to start to find a bottom somewhere in the housing market before we can start to build our way back up.
And you think that this bill passed by Congress, signed by President Bush, is the bottom?
Well, I believe it's the beginning of us being able to dig our way out of the bottom, yes.
Is there something about the housing industry that makes it such an incredible impact on the stock market? Because you would think energy prices, I mean, there's a lot of things that could affect the market.
Yeah, it's affected our overall economy, where you have a lot of individuals who have their day job and they've gone out and had done a lot of speculative nature, trying to find homes to flip. And right now we're doing a lot of financial planning for individuals that are stuck, so to speak, with one or two additional residences on top of their initial primary residence home mortgage. And that is becoming a very big squeeze because they can't sell the properties and they're below market value right now, so they flipped upside down on them. So it is a drag across the entire country right now.
I mean, these are actually individuals who not only own their own home, but go out and buy a home for investment purposes, try to, when you say flip it, meaning they try to sell it, I guess they put something into that house and then try to sell it at a higher price? Yeah,
they put something in. Unfortunately, in a lot of cases, they haven't put anything into it, and that's really what the real challenge is. We have clients as well as individuals we do financial planning for, from Massachusetts all the way on down through the coast, South Carolina into Florida, out in Arizona, who a lot of Pittsburghers are major property owners across the country.
Yeah, their vacation homes in Florida.
Vacation. If they vacation somewhere and they saw another house, they figured, hey, I can buy that at X and I can flip it for X plus, I think, 100,000. Yeah, there's a lot of that going on.
Well, most of us, of course, only have our one home, the house we live in. And I guess the question here is, are there investment strategies that we should be pursuing if our housing value, I mean, for so long we thought that our home equity value, the value of our house, was really the basis of our retirement. That's not always true anymore.
Yeah, that's not true. And our general rule of thumb with clients, the most often asked question that I get is, PJ, can I retire? And our standard answer is your residence paid off? So for the average retiree, that is the most important variable. And we say, well, your residence being paid off, back to a couple of your earlier guests, that means your first mortgage along with your home equity line of credit and any related loans. So that is the most important variable for retirees.
Yeah, how many people in this area can actually say they own their house completely without a loan on it, even a home equity loan? Are there a lot of us? I'm not one of them.
Yeah, for retirees, yeah, the supermajority of our clients do. They own their house, no home equity line of credit. They've done a great job of, and we're meeting clients 10 to 15 years before they retire in a lot of cases. So that is what a good financial advisor would be for, someone to be there for you and to be your coach and to work hand in hand with you.
Well, if you're in your late 40s or early 50s, but your mortgage is going to extend beyond your retirement years, should you be rethinking refinancing, trying to do something to make sure that the house basically is owned outright by the time you retire?
Yeah, you'd want that to be close because it's such a large percentage of your personal family operating budget that, where eliminating that 25 to 30 or 35% that's coming off of every dollar of income coming to your house is really a make it or break it decision in a lot of cases.
And finally, PJ, we have about 30 seconds left. As you look forward into this market, what are you feeling? Are we going to turn this around, or is this going to last for another year or so? The stock market.
The stock market, yes. I think it's going to take us another 3 to 6, maybe 9 months to dig our way out. What we tell clients is we preach is asset allocation, balanced portfolios, and this is a good litmus test for clients. Our average account has gone down about 35%. So when the stock market was down 10%, we were down 3.5%. When it was down 20%, we were down 7%. So when they're 401ks, wherever they're at, if they've got a good asset allocation, good diversification, they, albeit they will be down, but they should have mitigated a lot of that pain, a lot of that volatility.
Well, PJ DiNuzzo, it's a pleasure to have you on the show. Thank you again for coming in. We
Thanks,
appreciate
Jon.
that.
Thank you very much.
We'll be back with a program note and more of the Sunday Business Page in just a few moments.